What is up, YouTube? My name is Adam and this is Broke Man Finance. Today we are still talking about the hottest trend in the market, and I'm of course talking about EV stocks. And there is another acquisition that is happening right now between Hennessy and Canoo, and we're going to get into all of that. Now, I know what you're thinking. You're probably thinking, oh, another EV company. I get it, but look, you know it, I know it. There's still a lot of money to be made from these EV companies. They're not going anywhere, and we're nowhere near being done. There's only a few companies that are probably going to emerge to be extremely profitable. But I'm just trying to help inform you so you can make good decisions with your money. Now, I know you are very busy, as am I. Being busy right now is probably an understatement for me. So this is what we're going to do today. There is so much going on with this company. There's so much going on with Canoo that their investor presentation is like 80 pages long. That's pretty legit for an EV company out of all the ones I've been looking at. But I'm going to hit you with the highlights so you don't have to worry about it. If you like that style of no BS, then do me a favor. Hit that subscribe button, smash that like button, and make sure you hit that bell notification so you know every time we upload a video. I gotta be honest, whenever I started looking at Canoo, I thought, this is pretty impressive. I thought, you know what, this company has got a lot going on. They have multiple revenue streams, they have subscription services, they have got innovative technology that other vehicle manufacturers are wanting to take advantage of. And I promise, if you stick around to the very end of this video, you may be just as impressed with this company as I am. So who is Canoo? They just got established in 2018. They're around 2 years old. They have got a lot of money for a 2-year EV startup. It is stupid when you compare it to some of these other ones. They've got a good management team. They're a US company. They're based out of Los Angeles, California. And very recently, they were acquired by Hennessy Acquisition Company. As of today, they are trading for around $10.40. You can see that it's a very small cap right now, so it may be the perfect time to jump in this thing, because typically you see a lot of volatility in these EV stocks, especially when an acquisition is announced. And you can see right there that the share price since April 2019 has been pretty stable. Now, when I say they've raised a lot of money, they have raised since 2018 $450 million in capital, and that's pre-acquisition. To put it into context, Lordstown had 15, Fisker had 15, Canoo has 130 million in cash just laying around. That's the difference. They also have 300 employees. I think Lordstown has 70. Fisker may have less than that. This is a very fast growing company, but why? Here's some of the cars. At first I thought, I don't know, man, what the hell is that? But then I slowly started changing my mind when I saw the interior, all the room, and I started thinking about it from a different perspective. If you're a family, if you're a soccer mom, if you're a soccer dad, whatever, Little League, this van has a lot of interior room, and I'll get to why in just a second. If I'm a Uber driver, if I'm a Lyft driver, these vehicles are perfect. Take a look at this interior. It's hard to put it into context until you see some pictures like this to be able to understand how much room there really is. The reason they have so much room is they have this thing they call the Skateboard. Right, it's their technology. It's what their cars are built on. It is a very minimal footprint, while at the same time it maximizes the interior and space inside the car. Now, the Skateboard is just one of their revenue streams, because they're licensing this technology out and allowing other car manufacturers to use this technology. They are partnering with Hyundai, and they're going to be making Hyundai's EV vehicles based off of the Skateboard, as well as a EV car for Kia. That is a big deal, because Hyundai is a solidified automotive company all over the world. This is what Hyundai's head of R&D, research and development, had to say about Canoo. We were highly impressed by the speed and efficiency in which Canoo developed their innovative EV architecture, making them the perfect engineering partner for us as we transition to become a front runner in the future mobility industry. They can use the skateboard technology to create a variety of vehicles. They've already started creating a variety of vehicles based off that skateboard platform, as opposed to a Lordstown, which I just made a video on. I'll put a link above. Please feel free to go and check that out and give me some more view time. But they have the truck. I'm sure they're planning on making some more things, as are Fisker and all these other EV companies. But Canoo has got multiple cars. They've got multiple prototypes. They got I think 19 betas. They've got a lot of things going on right now for such a young company. There's a reason they have $450 million in capital pre-acquisition. Check out the SUV version. That car definitely has some cool factor, and much more cool factor than the minivan, right? That is a car that I would drive. I'm not cool whatsoever, but having that car would definitely improve my own cool factor. And if the interior is anything like the van, then it's going to be very, very bougie, chic, posh, whatever kind of word you want to use to describe it. It's going to be pretty damn sweet. Now, they're also developing a work truck, just like Workhorse and all these other companies are trying to develop these delivery service trucks. But Canoo is developing a truck that has a very small platform footprint, which is going to what? Maximize the interior space of the vehicle. And why is that good for a delivery truck? Oh, I don't know. Maybe because you can get more packages on it. If you can get more packages on it, that's going to require you to have less trucks, and it's just going to be more efficient. So they are using the platform to license out to other manufacturers. They are producing their own cars. But the next thing I'm going to talk to you about is the coolest, in my opinion, and most innovative thing that they are doing. And that thing I'm talking about is their subscription business model. There is no lease. There is no buying. It is a month-to-month subscription service. You pay a one-time monthly fee and you get use of the car. They pay for the basic maintenance. They pay for the insurance. They pay for everything that is associated with the car. You pay the monthly fee. If you only want the car for 1 month, you get it for 1 month. Okay, so look right here. The benefits of a subscription model. You pay month to month. There's no upfront payment or breakage fee. There's no dealerships. You have access to insurance within a Canoo app. The maintenance is included. Public charging is included. Registration is included. All you have to do is apply for a subscription. You get approved for it, and you go and pick up your Canoo vehicle at a nearby location. You drive it home. You use the vehicle as if it is your car. You don't have to worry about the insurance. You don't have to worry about maintenance. It's all taken care of for you in that one-time monthly fee. When you get done with it, well, just take it back. There is no more getting upside down in cars, and as soon as you drive off the lot, you know, the value is decreased by a substantial amount when you buy a car. There's no more 2 or 3 year leases, no more down payments. A month-to-month subscription service, it's like a Netflix for a car. It is a very, very unique idea, and I don't see why nobody hasn't started doing this earlier, but this could completely disrupt the entire just vehicle sale market. But why would they do that? Look at this. Okay, so a subscription model can generate an estimated 4 times margin on each vehicle compared to a direct sale. Think about Netflix versus Blockbuster. Which one has become more profitable? So now you're using a EV model like Tesla to sell cars. You're selling your platform and technology to different vehicle manufacturers, and then you have a subscription service like Netflix. Now, this stuff doesn't happen overnight. Although Canoo is moving and grooving really quick, and actually they're moving and grooving quicker than anybody else on the market, they're still very young, and a lot of these vehicles aren't going to be ready till 2021, 2022, 23, and so forth. And just to sum it up, I love the innovation of this company. I love the convenience. And you'll hear me say this, probably you've heard me say it in the past, you're about to hear me say it now, and you're going to hear me say it in the future. There is a value in convenience, there is value in innovation. When you have those two things combined, you are sitting on a potential lottery ticket. They're saying that they can have that vehicle charged up to 80% in less than 30 minutes. Less than 30 minutes. They can have you charged up at almost 80%. That is much faster than I know of any other charging station on the block, aside from maybe Tesla's supercharging stations, which is going to be more expensive to the consumer. And aside from that, the SUV style sedan looking vehicle is going to have over a 300-mile range. The van has got a top speed of up to 125 miles per hour. For an EV, that's crazy. Now, of course, they are projecting big numbers and explosive growth, but at this point, why would they say anything otherwise? It's not like they're going to come out and be like, we may do okay. What I do like, and I think is exciting, is the innovative business models. And I think that the Hyundai solidifies what they're saying. Hyundai pretty much put their stamp of approval on the skateboard technology, and I think that's a huge win. Hennessy Acquisition Company is going to inject them with a bunch of money, and this is getting ready to be over. I think they said once the acquisition takes place, which is supposed to take place in the fourth quarter of this year, this company is going to be valued at probably around $1.8 billion. But understand, this company has no money issues right now. They have a ton of cash for a very small company that's not public yet. Once this thing really comes to fruition and this thing gets some hype behind it, this is going to be a very lucrative company. But that's all from me. I told you I was just going to hit you with the high points. There is so much going on with this company. I could have spent an hour going through all the numbers and details with you, but I know you don't care. You got stuff to do, as do I. I've literally got a pizza cooking right now. So do me a favor, leave me a comment in the comment section below. Let me know what you think. If you think this company is going to be a complete flop, let me know that in the comment section below. I'm good with a little bit of devil's advocate, a little bit of debating, and really I'm just giving you what they're saying they're going to do. There's really no proof yet, but I would love to hear from you regardless. Remember, hit that like button, hit that subscribe button, hit that bell notification, and I hope you stay safe out there in this crazy Rona world, and take care.